What's up guys, Steven Dux here. Welcome to the new week video lessons, and today we're going to talk about some of the tickers. Just overall in March, we had a bunch of runners, either they didn't meet the pattern performance or they're running on really thin volume, and we got biotechs hype and low floor hypes. It seems like there's a lot of actions, but it doesn't really have that really good odds pattern existing on overall March. Let's get started. So Hunt, this is another one of the tickers that I ran from, I think from $10 to almost 103, and this one was running on really thin volume. As you can see, the volume was around 160k and our volume was around 700k in an entire day. Now let me give you an idea of how much volume should be traded throughout the entire day. So typically on penny stocks, the minimum volume on current days should be 4 million, at least 4 million, or you cannot place any kind of trades in there. Either the spread is going to be huge or you're not going to get a really good execution price. Second, as soon as you get in, there's no liquidity. So if there's no liquidity, then you're going to be stuck in. That's the two things. It's really dangerous to get into those low liquidity stocks that it seems very manipulated. If the stock is trading around 200k, 400k share, there's definitely can be one individual just buy the entire flow and manipulate the stock to 100, 200. There's nothing you can do. The volume has to be around at least 4 million. Maximum is around 40 million. So over 40 million, the stock is considered to get really crowded. If the stock is crowded, it's going to be really difficult to trade throughout the entire day. If it seems to manipulate like this, it's really easy for SEC to hold those kind of stocks. If you're stuck at $90 per share, then you're pretty screwed, because as soon as it opens, you're gonna go to right where it started, probably at $10. Don't blindly chasing into low liquidity stocks. Minimum required volume 4 million. I was hoping Hunt can bring a bunch of sympathy plays. It turns out it didn't. It bought a bunch of really low flow stocks. On Friday, you had COWT, you had GBR. So those two tickers are really low flow. On Pinviz, it shows COFWT was around 800k flow. GBR, another stock around 800k flow. I think GBR was a little bit higher, around 2 or 1 million flow. I remember back in July, the stock was super manipulated by a short trader. It went from 4 to 12 and dumped from 13. But it went from 13 to 4 in one day, and you had a couple bounce shorts back then. I tend to stay away from any flow under 2 million, even though it's a good pattern where it's a bounce short. Sometimes just can get a pattern like this. It fails on the first day, second day, a super green candle caused a breakout. When the volume was increasing on Friday, the volume estimate, it seems like it's going to break the previous resistance volume, which is around 10 million. 10 million doesn't consider as a really heavy resistance. That's why I didn't short into it. But turns out you fit it. Sometimes you get those opportunities that you think you can go in and make money, but overall you won't make money in the long run. So it's really good to practice the discipline. Don't trade the stock if it doesn't meet the criteria, if the resistance is not heavy, and it's also on low flow. So I basically skipped GBR. Same thing with CWT, and this one was another tricky one. On typically normal tickers, if the stock gaps up and falls back about 50% from its entire gain, and it typically doesn't come back. Now this one came back. Same thing, low flow can do anything. So if the stock is gapping up on really low flow, under 2 million, don't ever underestimate the potential of coming back. People who are shorting into this bonds got completely squeezed. Now look at the squeeze volume. Right here, squeeze one time, get halted, that's about 200k. Squeeze another, halted, about 400k. 400k squeezed about almost, I would say, each candle is around 15%. On that really thin volume and squeeze that far on the price, that's the risk of shorting into low flow tickers. No matter where you shorted, I don't care where you shorted on CLWT or GBR, you may make money, but in a long run, low flow will always come back to get you. Never short the weakness on low floaters. If you buy, just be super careful. CLWT, if you go long, I think that's ideal. because it's traded this amount of volume. If you look at COWT, traded about 16 million volume on intraday. If you bought Hunt, well, those are two very different things. Because if the stock is on really low liquidity, you buy it, you always lose. If the stock has volume, you buy it, sometimes you win. Just be really careful which low flow you want to buy into. For me personally, I major in shorting, so I'm not really comfortable to go long on super low flow because I hate get intraday halted, especially on something like Hunt. I think I've seen one before. The stock was trading decent amount of volume, so it was at the first green day, trading on regular volume. I think it was up around 400% or something like that. The stock was around 60 cents. It squeezed to $1, and I was long around 65. I was up around 15,000, and the stock got halted. When it opened at like 40 something cents. So I was instant down 20%. So that's unfortunate. Also, you get stuck into those trades. Really low flow sketchy penny stocks, I always suggest to go long really small. Don't ever try to go full positions on those, especially on those longs. If you get intraday halted, you're pretty much screwed, instant down 20%. Now we will see about Hunt. Once it opens, it will probably open around $20 to $10. So that's the tip I can give today. Hopefully you guys have a great March. Thank you very much for watching this video, and I will see you guys next time.